Does capitalism genuinely make people wealthy, or does it merely empower money itself? And does Islamic finance restrict growth, or does it safeguard wealth in a deeper, more meaningful way? This question is not theoretical. It directly affects how Muslims earn, save, invest, and live every single day in a world dominated by capitalist systems. Today, the majority of Muslims live within capitalist economies. Their businesses, banks, investments, and incomes are governed by capitalist rules. At the same time, they are taught Islamic principles that forbid injustice, exploitation, and riba. This creates tension. Many Muslims feel forced to choose between worldly success and the hereafter, between faith and financial achievement. Yet Islam was never meant to disadvantage Muslims. It came to establish responsibility, justice, and balance. To understand which system truly builds wealth, we must first understand what each system is actually designed to achieve. The foundation of capitalism is profit maximization. The goal is simple: increase capital as rapidly and efficiently as possible. Money is treated as a tool that must constantly grow. Capital that does not expand is considered wasted. Success in capitalism is measured through revenue, growth, market dominance, and financial returns. There is no denying the benefits of this system. Capitalism fuels productivity, competition, and innovation. It rewards ambition, efficiency, and speed. Many modern conveniences exist because of capitalist incentives. However, capitalism also carries a darker side that is often overlooked.
Capitalism allows money to generate more money without effort. Interest-based lending, speculation, and financial manipulation are not accidental outcomes. They are structural features. Wealth accumulates at the top, while risk is pushed downward. Debt becomes normalized. Pressure becomes constant. People gradually become instruments of the system rather than beneficiaries of it. Islamic finance begins from a very different premise. It does not ask, how fast can money grow? Instead, it asks, how ethical is this growth? In Islamic finance, money itself is not a product. It is not a commodity meant to multiply on its own, but a medium of exchange. Islam prohibits riba because it removes responsibility from wealth. It guarantees profit without shared risk or effort. Islam also forbids excessive uncertainty, deception, and harm. These rules are not designed to slow Muslims down. They are meant to protect society from injustice and systemic collapse. In Islamic finance, wealth must arise from real economic activity. Trade, services, manufacturing, agriculture, and ownership are encouraged. Profit is permitted, but it must be earned. Risk must be shared. Accountability must exist. This creates a fundamentally different relationship between money and human beings. This is where much of the misunderstanding lies. Critics argue that Islamic finance limits growth. In reality, it limits exploitation. It slows reckless expansion, not meaningful progress. Capitalism grows rapidly, but often becomes fragile. Islamic finance grows more deliberately, but with greater resilience.
Consider a simple example. In a capitalist system, a bank can issue loans repeatedly, earn interest regardless of outcomes, and shift risk entirely onto borrowers. In an Islamic system, profit is linked to performance. Both parties benefit when a business succeeds, and losses are shared if it fails. This discourages irresponsible behavior and forces more thoughtful decision-making. This difference shapes mindset. Capitalism rewards short-term gains. Islamic finance promotes long-term stability. Capitalism celebrates accumulation. Islamic finance emphasizes circulation. Capitalism asks how much you own. Islam asks how responsibly you earned it and how wisely you used it. Now, consider wealth, not merely money. Money is numerical. Wealth includes stability, dignity, independence, and peace of mind. Under capitalism, many people earn high incomes while living under constant stress. Their wealth appears large, yet remains fragile. Their choices are dictated by debt. Their futures are shaped by fear. Islamic finance approaches wealth holistically. It considers social responsibility, spiritual accountability, and family stability. Zakat is not a charitable afterthought. It is a structural mechanism that prevents inequality and stagnation. It ensures that money serves people, rather than people serving money. This does not mean Islamic finance is perfectly implemented today. Many institutions labeled Islamic still operate under capitalist pressures. Some products imitate conventional finance rather than offering genuine alternatives. This is a failure of execution, not a failure of principles. At the conceptual level, Islamic finance and capitalism are not comparable systems. They represent two different philosophies. Capitalism trains people to pursue more. Islamic finance teaches people to manage better. Capitalism defines success through accumulation. Islam measures success through impact and accountability. Muslims must also confront an uncomfortable truth. Many desire capitalist outcomes under Islamic labels. They want rapid growth, guaranteed returns, and minimal accountability, without riba. Halal wealth does not function that way. It demands discipline, patience, and wisdom.
Islam does not oppose ambition. The Prophet ﷺ and his companions were traders, leaders, and entrepreneurs. They built wealth, but they did not worship it. They understood wealth as an amana, a trust, not an identity. This leads to the central question: which system truly builds wealth? If wealth means rapid accumulation for a few and relentless pressure for many, capitalism succeeds. If wealth means long-term stability, shared prosperity, dignity, and peace, Islamic finance offers a stronger foundation. Islamic finance does not promise quick success. It promises sustainable prosperity. It does not remove effort. It directs effort. It does not eliminate risk. It distributes risk fairly. The real tension is not between Islam and capitalism. It is between speed and values. Capitalism moves fast, often without reflection. Islamic finance moves carefully, asking who benefits and who bears the cost. For Muslims, the choice is not about rejecting the modern world. It is about navigating it with clarity. One can operate within capitalist economies while holding Islamic principles, but only by understanding the system rather than blindly following it. Halal prosperity is not about choosing between worldly life and the hereafter. It is about aligning both. Clean wealth grants a Muslim greater freedom, resilience, and capacity for good. A debt-burdened and stressed individual cannot serve society effectively. So, which system truly creates wealth? The answer depends on how wealth is defined. If wealth is measured only in numbers, capitalism appears dominant. If wealth includes peace, accountability, and barakah, Islamic finance provides a deeper and more humane solution. The final question is not which system is richer, it is which system you want shaping your life. Systems do more than produce economies, they shape mindsets, and mindsets shape destinies. The real question is not how much money you make, but how ethical that money is, how stable it remains, and what kind of person it allows you to become.